Hey CMS, welcome. In this session, we'll discuss about case-based questions. As you all know that from September-October window, we'll be having case-based questions instead of essay questions. So what are case-based questions? What is the pattern? How to solve the questions? Yeah, what different types of questions you experience? This we'll discuss in detail in this session. For your convenience, I just added here Section E, Investment Decisions of CMA Part 2, combined with the Section F. Section E is related to investment decisions. Section F is related to ethics. So what you can expect is multiple section. So you can expect a question from multiple sections. That is Section A, C, Section B, A, Section C, B, or Section A and F. So we can have a combination of question. Don't expect one CBQ from only one section. Is that okay? Done. So each CBQ, as you know that 2 CBQs will be given in the exam. Each CBQ will have, 5 to 6 questions. So 2 CBQs are to be finished in 1 hour. Case-based questions. If you save any time in multiple choice questions session, of course, that will be carried forward. There's no change in that rule. Yes. So section E of CMA part 2 in combination with section F. All right. So there are 7 questions added here. The question says, there's a scenario given here. The question says that Precision Health Care Solutions Incorporation develops a software and training programs for hospitals and healthcare providers. Facing rising demand, management is evaluating 2 long-term investment proposals. The CFO is an IMA member, very good. Appoints an external financial consultant, also an IMA member, to analyze both the projects to recommend the better investment. So we have one investment to be selected among 2 options. So proposal A, proposal B. Okay, so let's see proposal A. Proposal A says there is a digital learning center. We need to construct a digital learning center in Dallas for advanced medical simulation training. The company already owns the land, which they bought 5 years ago for $310,000. This is not to be taken into account because it is historical. What is the value of the land today? So the relevant fair market value. The land could currently be sold for $420,000. Land is okay. We have a construction cost. Building construction cost is $680,000. Equipment purchase price is $220,000. Working capital investment is $60,000. If at all you accept this project will give you operating cash inflows for the next 5 years at the rate of $305,000. Then let's see the proposal B. An artificial intelligence platform is to be developed by upgrading the existing software with AI-powered healthcare analytics platform. The company already owns a server facility, so we have that. With the current market value is already given $250,000, which will be the part of your initial investment that will be used for this project. Fine. AI software development. So we need to invest around $750,000 for AI development. That is the requirement now. It's a part of initial investment. Additional hardware required is $180,000. Employee training $40,000. Annual net cash inflows. So if at all proposal B is accepted, we have a cash inflow of $360,000 each year for the next 5 years. Now, there is some additional information added here which you need to concentrate on. The consultant recommends proposal B. He is giving some kind of input from his side that no, let's accept project B because AI software supplier is owned by the consultant's brother. There is a conflict of interest. This we studied in section F, IMA statement of ethical professional practice. So is there any violation of the standards what we studied there? Competence, confidentiality, integrity, and credibility. We need to check that. The relationship of the consultant does not disclose it to CFO. We got it. Now, the company requires an annual rate of hurdle rate of 10%, which is a cost of capital. Fine. Now the questions. Initial investment proposal A. So if at all you want to, invest in proposal A, what is the amount that is required? Remember, we discussed A plus B minus C. A is the total purchase cost of the asset, that is a depreciable base. B is the working capital, and minus C, if at all you have any old asset, if that is disposed of, how much money we are getting from that? A plus B minus C. So here, if you look at the amount here, proposal A, you have 420,000. Historical cost is not to be taken into account. Building construction, 680,000. Equipment, 220. Working capital is 60. So the total amount comes to 1380, which I fed this information, but annual cash inflow is operating cash flow. Okay, so it gives you 1380. Remember here, you don't need to add any commas or currency symbols. So just enter 1380, which includes what? 420, building 680, equipment 220, working capital 60, total is 1380. But don't consider that historical cost. I just clicked this before I start this meeting, therefore the answer is displayed. Otherwise, no, answer won't be displayed. Okay, just keep in mind. And this explanation also won't be there. Anyway, you know that. Perfect. Now let us see what is the initial investment of proposal B. Include the opportunity cost of existing server facility. Let's go and check what is the amount. Yep. Existing server facility is costing 250,000, which we are going to use if at all proposal B is going to be accepted. We need to, acquire some AI software or develop AI software, which will cost us 750,000. We need to purchase some hardware, 180,000. So 750 plus 250 plus 180, 1,180,000. And we need additional, training cost that cost you $40,000. So 1,220,000. 250 plus 750 plus 180 plus 40. Annual net cash inflows, that is an operating cash flow. If proposal B is accepted, next 5 years we will get 360,000. So what is the answer here? 1,220,000. Don't write commas. Don't write currency sign. Symbol is not required. These instructions you will get in the exam. Okay. Remember, the consultant violated IMA statement of ethical professional practice by failing that the vendor is his brother. You have 4 standards. As per IMA statement of ethical professional practice, an individual must adhere to 4 standards: competence, confidentiality, integrity, and credibility. So this is related to what? Violation of credibility standard or integrity standard? Integrity standard. Yes, integrity. Next, match the appraisal technique. Based on this information, each selected option is removed from the remaining drop downs. So just let me tell you that, see how many are there? 3 options. It's what? The moment once you select one option here, automatically that will disappear. Only that two other options will be active, which you can use it for the next. So let us read and apply that. Measures the present value of future cash inflows less initial investment. This is the formula of net present value. Sum of the net, present values of cash inflows minus initial investment. Yeah. So what do you select here? NPV, net present value. You see here, if you want to try here, you can't select NPV. Means what? That is been removed from the list because you already selected NPV for the previous question. Measures the percentage rate earned by a project. Under IRR method, we use a percentage method to arrive at the NPV value 0, where NPV becomes 0. The rate at which we discounted the cash flows is called internal rate of return. So it is in turn the formula of or definition of IRR. Anyway, we have only one answer. Measures how long it takes to recover the initial investment. Payback period. Payback period tells us that in how many years we are getting our initial investment back. Yeah, we discussed shorter the payback period, the better is. Yeah, payback period. Next. This type of question you read carefully here. Select exactly 3 options given here. What is he asking? Relevant cash flows for proposal A. Then you need to have a glance on proposal A, or else you have to open the proposal A, attachment again, and you'll have to have this, on a piece of paper, or you can highlight the important option in the exam. You can highlight it, the important information like this. So you can just have a glance again when you go back. So what are the relevant items here? He says, select exactly 3. But how many items are there here? 5. So what items that you need to select? Original purchase price of the land. Should we take or not? Current market value of the land. Say, original purchase price that was purchased 3 years ago. That we shouldn't consider. Current market value of the land, yes. Building construction, this money is required, isn't it? Yeah. Future operating cash flows, how much you are going to get in the future once this project is accepted. Consultant's commission is an operating expense. We don't consider that. So we selected only 3 among 5. So try to select here, it won't allow. Try to select here, it won't allow. But if you remove this by mistake, you try to select it, yeah, it comes. So you'll have to be careful reading this kind of answers. Okay. The next, order the capital budgeting process. The very first session in our capital budgeting investment decisions section is what? What is the purpose of capital investment? The next one is what? The steps. What is the first step? Initial investment. It is in the right order. Calculate project cash flows, investment appraisal technique, compare with the hurdle rate, investment decisions. In fact, I should disturb like this, I think. Okay, right. So you need to arrange according to that. What is the first one required? Right? What is it? Estimate initial investment. The number changes. The next one is what? Project cash inflows. The next one, the technique. Then use the hurdle rate. Okay. Then make investment decision. Then last question. Match each item to its cash flow category. We have different cash flows which we discussed in initial investment, uh, uh, operating cash flows, um, terminal cash flow, and some costs which were incurred in the past, sunk cost, relevant costs, opportunity costs, etc. So what these 3 items belong to? Yeah, working capital. Working capital is a part of our initial investment calculation. Yeah, so let us select here initial investment. Operating cash inflows, it is says clearly it is an amount of cash that is generated from the project once the project is accepted. Operating cash flow. Cost of old market research, R&D, market research, depreciation, amortization, these are all sunk costs. Sunk cost. So you will submit here in the exam, but you won't get the score. You will get the score once the uh, results are out. Yeah. So hope you understand and enjoyed the session. We'll see you in the next session with an interesting topic. Until then, happy learning.